This is Victory from KMD Financial Exchange. So I want to use this video to explain what I understand about liquidity in Forex. So what are liquidities? According to my knowledge, liquidities are orders that are waiting to be closed. This is the way I understand liquidity. Now, what do I mean by orders that are waiting to be closed? So this is the structure that we know, general knowledge that we traders know. The markets, when forming something like this, is in an uptrend, while when we get something like this, it's in a consolidating market, while when we get a move pattern like this, market is in a downtrend. So why is liquidity so important in the forex market, and why does it affect the market so much? Well, there's something I want you guys to understand, and that is where are people looking to buy and where are people looking to sell. See, when you understand where people are looking to buy and where people are willing to sell, then it helps you to understand the concepts of liquidity. Now let me give you an example based on the example. So if we're in an uptrend, this is where buyers will be buying from, and if there is any seller in this market, this is where the seller is going to be in that market. Now when someone buys, his SL will be below his entry position, and when another person sells, his SL will be above his entry position. Now when you buy into the market and your SL is below, your SL automatically becomes sell orders. And when you are selling and your SL is above your selling position, your SL is automatically buy orders. So what happens in the market is, when we have a lot of buyers in this level, there are a lot of sell orders that is sitting down here. Now, these sell orders that is sitting down here is what is referred to as liquidity, because market will or can do something like this, come down from here and then clear out this SL, and these people with their sell orders over here are now liquidated. The market pushes up and continues on the trend. And the same thing with those that are selling. So if I was selling from this particular level and my SL was here, will this push upward? Liquidity. So this is basically what liquidity is. Now, talking about liquidity and this support and resistance, because to an extent, when you are having a structure like this, or you're having a structure like this, here is resistance, here is support, here is support, here is resistance. The problem with this, and I want to show you in a second, why a lot of people sometimes hit SL with using support and resistance, or basing your strategy using the support and resistance concepts. This is what I want to explain to you now. So now let's say, for example, market is in a downtrend, then pushes up, we have something like this, equal highs, and then we have something like this, and then market is maybe somewhere here. Now here are supports, these two places is resistance. That is a fact. That is what it's going to be looking like in the market. Now the general idea is that when market should come back to a high like this, being its resistance, most traders would like to enter from this particular point and then their SL above here to take this market down to this particular support, or buyers will be looking to buy from here, their SL below, to take this market back to resistance. That is how do we like to play it out. And in this same scenario, we have breakout traders. What are breakout traders? Breakout traders are traders that we want to see this market uh, come and break through this support area, and then on a retest to this place they will enter on a sell, putting their SL above here, and then they hope that the market will go down. But in most instances you see that people that are buying from here, or traders that are waiting for market to break out to also sell from here, end up hitting out SL all the time. Why? Because this SL over here are sell orders, and your SL, if you are looking to sell, you place a sell limit here, these are buy orders, and market reacts to orders. So wherever there are lots of orders, market will come to that area and react from it. And remember that since your SL is around that place, both for the buy and the sells, is going to close everything, and therefore you become liquidated. And for someone that is hoping to sell this, you always, most times, this is, for example, now this is the general idea, that either market comes into support, you buy from support, or market breaks support, you sell from support. This is the general idea that most traders have. But most at times, this is what we tend to see, that instead of market doing either coming to here and picking up, or breaking this down and coming to here to sell, we just see market just do something like this, comes down, consolidate, breaks down, then pushes back up, then do something like this, and then this is what we tend to see mostly. And people keep on hitting SL on things like this, and it's because they fail to understand the concept of liquidity and how the big boys use this liquidity, and how they can use this liquidity to their advantage. So liquidity is also actually a concept that you can add to your advantage with market structures. If you're good with market structures, you can add it, and it's going to give you a good win rate. So if this is the way you approach the markets, cancel it. You will most likely hit more SL, hit more losses. So you want to start looking into something like this going forward, so that you avoid being liquidated by the big boys. And let me just give you a reason why this particular one is better. Why this one particular one is better. I want to give you a mindset into the way that the big boys work, think, or how they trade. Institution firm, people that are giving billions of money to trade. See, if market is maybe market is in a market is trending. Sorry, I want to say. So market is trending downwards, and they want to buy this market. Do not look to buy as a place like this, because price is too expensive. It's still expensive, and because they know that since there's a lot of lows here, touches there. Remember, your support line is an invisible line, but on the chart you can place the line, and those is where when price comes, it reacts, it bounces. So when there's multiple touches on a particular zone, that forms a support. So these big boys, they see it, and they know that that most traders already have their SL. That is like someone who bought here for the first time has his SL placed here. The second person that bought here has his SL here. Now the third person that will be looking to buy from this same level will also be placing his SL around here. And even if this market should come down, they will know that someone that who wants to someone who's looking to to sell it, place his sell limit, to place his SL around here. So this is what happened. This particular orders means sell orders, and once price comes here down to this place and triggers all these sell orders, they will all close. And as all these orders, thousands of them, are closing at a loss, there is someone who will be buying the orders. So who do you think is buying that orders in that thousands in bulk? Who? The big boys, the market movers. They're now buying it at a very cheap price. So if they should have bought it here. If they had 10 billion they wanted to buy here, and with here they can buy maybe like 1 trillion positions worth or here, because they know that a lot of people are buying from here. They wait for markets to push down here to come into this particular zone, because market reacts to what? Orders. So price will always come to where the most orders are, to react from there. So when price comes to where these SLs are locked in and triggers all these sell positions here, the institution will be buying. They will be buying from levels like this. Now you that you're looking to market to retest here, you'll be like, oh, there's a breakout. You place your sell limit, put your SL here. Now big boys have bought in mass. Now what you now notice is the next thing, market will just do this. Market will push back to this level, and because they have bought and loaded up their position from this place, the next thing, they push back up and they clear you out on the sell, collecting all the money that is here. And then also not just there. Now remember that there are equal highs over here. They will also do what? Clear these highs, moving to a high like this. And then maybe if they initiate some little, maybe like take partial profits, market comes down, maybe something like this, and then retail traders will like, oh, the big boys have come into the market, let us join them. And then the next day market start giving you a leg like this, and we've gone from a downtrend to what? An uptrend. And this was because of what the big boys did from this particular position. So this is how liquidity works. So when you understand that liquidity actually moves the market, and markets will always react to where these orders are, all you need to do is to look for where the market will where these orders are, where this market will likely react from, so that you don't want to be trading before the sweep happens. If you want to trade using liquidity or adding liquidity to your strategy, everything, you wait for the sweep to happen. Then after it has happened, you can join the big boys. Because yes, even on this particular move, on this second buy from this place, you can join the big boys from here and carry the market to the upside. But whenever you see market giving you a structure like whenever you see the market giving you a structure like this, and you're getting all these equal lows and equal highs, avoid highs and lows like this. These are bad places to buy and sell. Even if it looks like a W pattern, there's a likelihood that liquidity will be happening around here, get a flush before you now get the greater push. So when it happens, once this liquidity has been flushed to this downside, then you now get market structure doing something like this, doing like this and like this. Then there is now a change in market structure with this particular structural change, and we're having new higher highs. Yep. Then you have something like this, the push. That is how you can go about it. So liquidity moves the market, that is for sure. So you can go and check on the chart and see as you can incorporate this particular concept. Going to the chart again. So this is something like I said. So we have something like the market is in a downtrend. Market pushed up, gave us something like this. Now can you see that equal high over there? So most people will be looking for to do what? To buy from to either buy. Sorry, I wanted to give you an example on the chart, but I chose the wrong one, so I'm going to show you the point here. So let's take it, and this is current price action on gold on the 15 minutes time frame. So see what we are having here on gold. See that we have this leg to the downside, that is for sure. Now right over here we have, sorry, let me get this. Should I just use a line? I should just use a line. So right over here now we have our highs over here. We have their highs over here, a bit kind of like almost equal right over here. Then we also have some lines like supports candle support. You have multiple touches over here. So here is like kind of like a support of a thing. So right over this particular level now, what is happening here is you're seeing sellers came here, sellers were here, and buyers stepped in here, buyers stepped in here. So normally in the mind of uh, uh, most traders, what they want to do is, if market comes here again on the third time, put their buy limits, then their SL will be maybe below somewhere here, and then sellers will be maybe looking to sell from here, and then their SL maybe above here, around that level. And on this both scenario, if you can check properly, see if someone was looking to sell from this particular level right over here, and your sell limit was here, and your sell limit was here, your SL was now above that level. You see that with this particular red candle, this particular red candle move, you have been liquidated, sweet. It's as simple as that. And then let's say you're buying from this same level again. With this current price action, there is a high chance, and let's say your SL is just below this level. With this bearish, look at how the market is. It looks like there's momentum. Let me just take it across. It will take time, little time, but there is a high chance that anybody who is buying from that particular zone will also get liquidated. It's going to hit the SL around that is it. So all these people are buying from here, people are buying from this level, people are selling from this level. When market push up to this level, their SL buy orders, and then their SL here are sell orders, and this is how liquidity works. So they come and then they push price down from that place, and that is how they keep on making money from most traders. And the funny thing is, for this market, I'm still looking for price to come to over this level before we pick up, because I trade now based on supply and demand zones that will not go much. So this is basically when somebody is just using supply and support and resistance to as his confluences for taking trades. Most of the time, it's not like it happens all the times, but 50% of the time the person will keep on hitting out SL. Keep on hitting SL, because after this particular candle, this green candle, this is a momentum candle, you are like, okay, let's market has broken out of this resistance. You now bought in at this, or you place your buy limit at this same level, and then market opens the next candle. What happened? It pushed up to the upside. Yes, it came in, tap you in, open your buy limits, and then your SL is now below the area around this place. What's happening now? With this particular red candle, you're out. You're liquidated. So it happens all the time. So instead of keep on falling prey to these things that these market movers keep on doing to always eat your money, just find a way to learn the concept of supply and demand, so you can turn these concepts into winning positions. Because based on the concept that I trade, there is a supply zone right over this level around here. So if you have placed your limit, you'll be like maybe around here, it will be triggered, and all this way down to this area, you would have hitting your TP around this area, and you're out, using all these places as an area as liquidity and getting your trade set up. And there's still a high chance the market will still take out these lows, and then we finally see there, because there is a demand zone for me. So that is it on these supply and demands. I'm sorry, on liquidity, and I hope it was helpful. And if you have any question, you can reach out to me on WhatsApp. Yeah, this is my number: 34 49 35 and 64. If you're not a Nigerian, just use +234, then you start with 7 and you take it like that. And that is just it. So reach out to me. You have a question, I'll be glad to help and also make other videos. But this is, we watch and see what the market will do. Thank you guys for watching. You can also like, comment, and so that other people can see this and it can be helpful to other people. Thank you guys for watching.